You are about to watch the best conversation I've had in a long time in the trading space. This is with a guy called Dirk Hartig, an amazingly cool German guy that's been a trader for coming up to 25 years. And he actually runs the academy side of Prime XBT, which is one of the exchanges I've been working with for actually now and years ago. This is an exchange that allows you to trade commodities, indices, and Forex on a crypto exchange, which is very, very cool. And we're diving into a lot of very deep topics. We're going into how the economy with interest rate changes, inflation, and so on affect the price, where we think the price is going to go, if we think we're going to see it drop lower, or if we think we're in a bull market. And actually, Dirk is quite bullish. Dirk has some really strong cases, which you're going to see towards the beginning of this and towards the end of this podcast, on why he thinks we're actually going to be we're actually in a bull market right now that's going to potentially take us to new highs. And we're tackling this from a really grounded perspective. Look, bottom line, if you like the content that I've been putting out on this YouTube channel, the way I want you to imagine this is, look, I've been around for a while. I've been in these markets for like 5, now coming up to 6 years. Dirk is like who I hope to be, within 10 to 15 years. And I'm not saying that lightly. So I think if you like the content that I'm putting out, you're going to absolutely love this podcast. This was so much fun to record. And the guys at Prime XBT and Dirk, I know you're both watching this. I want to do this more often. This was one of the best things I've done in a long time on this YouTube channel, and I really appreciate having the opportunity to do it. If you want to check out Prime XBT and get up to $7,000 in free exchange bonuses, that is literally whatever you deposit, you get 7% of it back as a bonus. Go ahead and check out the link in the description down below. When you do that, you're actually getting basically free money. Consider it like demo money. That is money which Prime XBT is giving you for free. And if you make money with that 7K, up to 7K, you can withdraw it. And if you don't make money, again, it's like demo money. So it doesn't really matter if you've lost it. Super cool opportunity, phenomenal exchange, and there's no other way to put it. One of the best conversations I've had in a while. So please enjoy. So, Dirk, what do you think about inflation for the markets?
Well, I've been saying this for the past months, really. If I look in the past, every time inflation was coming down in the past, that coincided with the low in the stock markets. You can see this on this chart visualized by the red line. The yellow line is inflation. And if you compare that to the S&P 500, every time we went above 6% in inflation and then came down, that was the low of the stock market. So I'm asking the question, obviously, here, why should it be different this time? Yeah, why is everybody...
Do you think... I think the reason a lot of people think it's going to be different is... it always feels this way when things are bad, right? That they're going to get much worse. Inflation numbers ticked way higher in the past. Do you feel like it's not possible that this is a bit of a, for lack of a better word, a pullback before it gets worse?
Well, no, of course we can have a little bit of a pullback to higher inflation numbers. We're probably going to see the effects, by the way, of that in 2024 in the beginning, because right now we have seen prices for natural goods, for commodities rising a little bit again. But we're for sure, I'm 100% certain that not going above this, I think 9.1% or something like this we have in the top there in the USA. I do not think this is going to happen. So
and just to clarify, if commodities are going up in price, that's what generally reflects in the inflation that consumers experience.
Yeah, because that affects everything. That affects the food you're buying every month. That's going to affect when you want to build a house or something like wood. That affects the prices of copper, so electronics and everything. Commodity
just
prices
becomes more expensive.
Becomes more expensive. I mean, this is what inflation is. At the gist,
Yep.
So the problem now walking forward, of course, is that the Federal Reserve Bank, they would like to see a weaker job market in the USA. And what we saw last Friday in terms of job data, of course, was like the opposite. We saw the economy is very strong. There are a lot of job openings in the USA, and unemployment rate is at a low point. And they don't like it because the US economy is driven by consumer spending, by people going into shops and buying stuff. And if that happens, it's going to maybe drive inflation still a little bit because people have leftover money that they can spend. And that leads to what we saw last Friday, like a little bit of a flash crash on the markets, like on Fridays, because that would mean that the Fed is not going to lower interest rates as fast as the markets had hoped. However, in my opinion, that doesn't mean that they are not going to pivot somewhere in Q3 2023. So in summary, I think we are seeing like really the early stages of a new bull market in stocks and cryptocurrencies.
So you really think that this could stick, and
yeah,
and we're looking at a new I'm thinking about Bitcoin. I'm just looking at my Bitcoin charts on the right here. We usually have. Here's the thing: is like, so you look at back at 2018, 2018/19. We were kind of consolidating down at 3K. We were stuck there for like 3 months. I'll just actually bring this on screen real quick. We were stuck there for like 3 months, and we weren't really able to do anything. And we got that very long period of kind of consolidation as a result. And that's kind of what allowed a lot of the players that, perhaps you could call them smart money, to accumulate down here. And then we were able to kind of blast off. I don't know if we've had, at our absolute low, if we just kind of stretch out how long we traded down here for, a lot of people would make the argument that you need like a long period of accumulation in order to like see a new bull market. This lasts about 60 days compared to back here 140. If you count this, we're very much on par. We're actually a little bit further ahead. We're at 200 days. And the argument that I've been making is that this is, for lack of a better word, this is shitty enough compared to this, to where
true, yeah.
If we've reached that level of max pain, everyone's always like, we need max pain. If we've reached that level, it very well just could have been because we've had a relentless bear market so far. But my major concern with this, just looking at Bitcoin without taking macroeconomics into consideration yet, is that everything we've seen here so far, to me, looks like a really classic bull trap. And I'm curious to know what your take is on that.
Could be. I mean, the beginning of a bull market doesn't mean, that we are flying to the moon, from now and then 2 months down the road, we are at $65,000 again. It's always going to be an accumulation phase. And we have seen that also, for example, back then in 2019, that Bitcoin very quickly can pump like 30, 40, 50% just to go down again. But as long as the new low then is going to be higher than the past low, that is a confirmed bull market. And we're still in an uptrend, a volatile uptrend that's going to cause us for sure a lot of pain still this year, but it's nonetheless an uptrend. Maybe I can show you that on this chart here a little bit.
Yeah.
So
see what that looks like.
So I had a look here. This is a monthly chart, so really very long term. And for me, the interesting phase is what happened 18 months prior to the halving. So next halving Bitcoin probably next year, end of March, early April, the way it looks right now. And you can see here always in the 18 months prior to the halving, we had this accumulation pattern with a very volatile phase where things went sideways, then suddenly down, then up again. Here in prior to the halving 2020, we had this phase where Bitcoin shot up. I remember everybody was calling, new bull market, just to go in this boring sideways range then. And who says it's not going to be different now as well? I can very well see us going all the way up to 40,000 just to crash down to 20,000 again. That is
the main thing I've been talking about on my YouTube channel for weeks.
And this is that's why it's so important, and this is why I like to talk about these more long-term charts, because as traders, and I guess your audience, is affected by this as well, we kind of tend to very often focus on lower time frame. Let's say like 30-minute charts, or maybe even 5-minute charts or something like this. And we have a saying in German, sometimes you cannot see the forest because there are too many trees. So it's like, when you use those long-term charts, you kind of get an eagle eye view. And sometimes you notice like, well, you know what, I shouldn't give in so much to what is going on there on a daily level. Are we going up or down? It looks like, if I compare this to the patterns, how they were in the past, well, it looks pretty positive for Bitcoin. So maybe my trading strategy should be aimed more searching for entries for long positions.
I can totally see where you're coming from. I'd love to subscribe to that kind of theory. I think right now I'm kind of in the middle, but I think one of the reasons people are quite hesitant for this is, and you already, tackled this, as you think that you mentioned that kind of Q3, Q4 this year, we'd be looking at the rate hikes reversing, and we start looking at a more bullish environment for, first of all, indices, and then it trickles down into, crypto markets as well. I think that's a really big if. And I think if we do get it, then yeah, we could be looking at a really nice situation here. But would that be enough time to, if we zoom back out to macroeconomics, would that be enough time to put the dollar in a position where, we don't need to see interest rate hikes or for them to be kept particularly high? And then we can look at, kind of coming back down. I know that with the previous chart you showed, if you can just flick back to that,
sure.
That, when the interest rates were high, they actually came down like pretty much as quickly as they went up.
Yeah.
And that's promising.
That's promising. I mean, let's face it, since the early 2000s, the market is pretty much addicted to cheap money. And I think pretty much every, let's call them first world countries out there, they just cannot afford an interest rate environment that stays at like 5% or higher for a prolonged time. Because they have like a GDP to debt ratio above 100%, well above 100%, especially through Corona now. So eventually we will probably see something like quantitative easing coming in again. I mean, the next crisis is just around the corner, and the next black swan event. Last time the Fed wanted to stop quantitative easing, then Corona came around the corner. I don't know what it's going to be this time, but for sure there's going to be something that some effect, I don't know, maybe aliens land or something, just making things up now, of course, that's going to cause the Fed to open the faucet again and flood the markets with cheap money.
Okay, do you think we're looking at like some really big, super scary depression then, like in 26, 28, 2026, 2028, something like that?
Could be.
Where we just basically kick the can a bit further down the road?
Yeah. Could be, absolutely, but it's always those kind of crises nowadays are always a bit like short-lived, in my opinion. And I've been through the .com bubble. That is when I started my career back then, and I've heard many comparisons to that, like the scenario we are seeing nowadays on the markets. But by the end of the day, I think things are looking more positive than media might tell you. And I'm saying this as a German, we tend to be very negative on everything.
Yeah, it's reassuring, mate. I like it. I want to show you one chart. This is something I've been talking about for quite a while on my channel. I'm actually so glad you said 40K, because you're the only other person I've spoken to that's specifically said that price target, where I was describing some sort of price action that looks... Can you see my chart, by the way?
Yeah, I can, yeah.
Yeah, something that looks a little bit like this, followed by... I mean, you actually said exactly the same thing. And what it ends up paying... And I've got two scenarios here. Is actually I can drag this way down. And this is for the bears if you're more pessimistic about the market. I think this is still very likely to happen because of liquidity grabs. So that's number one. That's what I want to ask you about first. Liquidity grabs up here, followed by a drop down. And then if we do end up, kind of managing to find some support down here, hopefully there's going to be some nice fib levels, that might line up or whatever at these kind of areas. We start capturing some support down in this range that we used the support previously. And then I still don't think we're going to be on a rocket ship. I'm actually expecting perhaps something very annoying, like into Q1, Q2 of next year, and then we kind of see like this to me, and if I, what makes this really convincing and how I love to show it to my viewers is actually taking the bars pattern tool, because this just makes it so much easier to visualize this kind of annoying price action, and taking something like this, for example, to me, like, what do you think about this kind of chart structure?
Yeah, absolutely would make sense. So first of all, I mean, I just yesterday I did a video on this golden cross we're seeing in Bitcoin. Although I particularly not like patterns like this very much, but if you look into the past, there's like a 65% chance that this is going to lead to a pump. And the minimum target for that was like 40%, which would put us to $32,000 in Bitcoin. And I can assure you the FOMO is going to set in like crazy when we see that. And then exactly what you said just now is going to happen. We're going to dump. The question then is going to be, is the bottom going to be higher than the last bottom or lower? If it's lower, it's still a bear market. Then I'm proven wrong. that's okay. And I have to take the hit for that. But if the bottom is higher, so for example, at 20 or 21,000 US dollars, then it's actually a higher low, meaning we are in a bull market. That is the definition of a trending bull market then. Yeah, something like this, exactly.
Yeah, that would be beautiful. Short term, I've been looking at this chart a lot. It looks to me like we're in one of these classic situations where we kind of, set a high, deviate above it, come back down.
Yeah.
And to me, this kind of looks like the same thing.
I was kind of waiting for that actually for like over a week now, for a little bit the pullback again into this area, 21,000, 20,500 US dollars. And I always said, if that happens, I want to build up a long position there because you have an extremely good risk reward ratio. You can put your stop like slightly under 20,000, but your upside is somewhere again then at 24, 25,000, maybe even 30,000. That's like the kind of trade actually I'm always looking for, where I can win multiple times or the money I have to risk for that trade. It's a trade I would do really every day because I only need to be successful like in 30% with it, and I'm still going to earn money. However, it's a very difficult trade, of course, on a psychological level, especially if you are new to this whole trading circuit.
Let's zoom into that. That's really hard. When people ask me about being a trader and things like that, and they're like, "Oh, you must be so busy. Like you must be glued to your phone all the time." And I'm like, "Okay, well, I'm not like a little forex scammer. So actually, no, my job is literally waiting my whole life."
Yeah.
And,
I still remember like very well when I started working at a trading desk. I think that was in the year 2000 actually, and my mentor back then told me always, Dirk, if you're not bored and waiting 75% of the time per day, you're doing something wrong.
That's as powerful.
I don't want you to do the clickety-click action. I know that's fun. I know that's addicting, especially nowadays. You have all those nice apps, that kind of make you click more.
They glorify it.
They glorify it. That's a good way to put it, actually. But it's like marketing strategy, of course. But anyway, and the hard part of it really is to stay patient and to wait for this one perfect setup that puts the odds more into your favor. And that's very hard. That's very boring. Still, after 25 years, this is sometimes hard for me. I remember last year we had a phase, especially in cryptocurrencies, where we just went sideways. I was like, came into my office, thought I have to trade something today. No. Don't do that. Don't do it. Do mistakes like this again.
Well, this is the thing is I think a lot of people, they come in here and they're like, okay, the more buttons I click, the more often I click buttons, the more often I analyze the charts, the more often I sit in front of my laptop, the more money I'm going to make. And the argument I'm always making is, no, have your levels defined and wait for the levels to be broken. Have a plan for each situation, whether we go up or down. And if there's something, I'm sure you've read Market Wizards by Jack Schwager. Similar quotes.
It's one of my favorite books, actually.
Same.
All of them. I mean, it's a whole series. No,
there's 4, right?
I think so. Yeah.
Yeah, I've only read 2. Market Wizards and New Market Wizards, but there's this one specific quote which really gets very close to what you said, where it's like this dude is saying, I just kind of wait quietly until there's some money sitting in the corner of the room, and then I just go there and pick it up, and that's the day's work done. And
it sounds so simple, but it's so hard.
Yeah,
I don't think there's any job in this world where you are so quickly faced with your on a daily basis with your own character and your own mistakes.
Yeah. Oh yeah, absolutely. It's I describe it as trading is like having a permanent psychological war in your brain. And that's it. Yeah. And I think what's really compelling about this thing of you just go pick up some money in the corner of the room is it really strikes home just how much that you need to wait. There's no element of like a lot of people will, because here's the thing is when you take that kind of trading approach, if you compare this to somebody that trades much more actively, what they're going to be doing is making like 10% profit and then losing 8. This is best case scenario, making 10, losing 8, making 11, losing 7. Whereas the guy that just kind of waits will not make any money for like a 2-month period, but month 3 comes along, he's going to absolutely blow his account up with a really good trade, like this kind of swing trade that you mentioned earlier, 21K up to like 30, really good risk to reward. And then the guy that's just constantly clicking buttons, if you compare their accounts, again, assuming that guy that's more active as a trader is successful, which almost always won't be the case. If they are, you'll see that the guy that just waited, because he didn't suffer as many losses and because the losses weren't as big and so on and so forth, many different reasons, he will come out ahead. And it's like, you know, do you want success? We're recording this in February. Do you want success in March or do you want success in December? You know, do you want it to be transient or do you want it to stick around? And I think that's an approach that a lot of people don't take because they join trading in order to, I mean, it's like a lottery ticket. It's like, you know, they're kind of saying, like in the pandemic, everyone was just sitting at home. They're like, shit, okay, I want to make some more money at home. Let me just, you know, download Robinhood, you know, 0 fees, right? I'll just spam buy on GameStop or whatever.
Off to Wall Street bets,
yeah, exactly. The subreddit there, it's brilliant. Yeah, so you're looking at you're also looking at a bit of a liquidity grab where we maybe drop down from here, yeah?
Yeah, that would be would be the ideal scenario, really. Bitcoin now going down first, maybe 20.5, even 21,500. I'm for sure going to open a bigger buy position, then have my stop shortly under 20,000. Well, if it gets stopped out, it gets stopped out. You know, that's part of the game. Still a trade I would.
Just to zoom into that stop loss question. So I've got this box defined right here, 18.4 up to 19.6. You know, for me, I wouldn't really want my stop loss to be anywhere in this range. I'd probably want it to be like below 18.4, which is very wide. I'm curious to know what you think of that, and if you'd place it differently, we can show you.
You never. So this is like really an important lesson that I learned many times the hard way. Never place your stop loss exactly at where support and resistance are at the moment, or support in this case of a long trade, because you have algorithms out there hunting for those prices. This leads to probably what everybody who's been trading for a bit longer has experienced before. You get stopped out, and then the market reverses into your original trade direction. This will happen and can happen. So I would always, like you just demonstrated, place my stop under the lowest support there. So in this case, 18,200 would make sense. Of course, when you gotta also kind of investigate, where do I enter the market? Is my risk-reward ratio still in a positive manner?
It gets very wide.
Positive for me. Yeah. It gets very quick, very wide. The question, of course, then also is like, okay, if we go down there, are we going to follow through and go down to 16,000 again?
And that's exactly what trips traders up, right? It's like, you know, you can commit to this plan when you've entered at 21, but it gets a lot scarier when we're actually at like 18.8, and you're thinking, well, shit, you know, maybe we're revisiting the lows as well, because sentiment gets bad as well. That's something that I found is very... Go on.
Yeah, I mean, that's part of being a trader, that you constantly self-doubt yourself. I went through the same phase in the past 6 months again, when I started buying stocks, buying crypto again in late September, early October. Many times I questioned myself, my God, is my theory correct? Am I committing financial suicide here? Am I like really think so? Because when you constantly get like people telling you the exact opposite of your own bias, so to say, and many of those people being, in my opinion, much smarter than I am. Of course, you get self-doubt, but it's part of the game that you have to stick to your plan then. You have a target and you have an exit strategy in case you're wrong.
Do you find that more often than not, if you just stick to your plan, you would have worked out okay? Or that for most people... Because the way I talk about this is like, yes, you've got to stick to your plan, but your plan has to be really good.
That's the point. So of course you cannot just randomly come up with a plan. That's why I always like, one of the first things when people ask me how to pick trades, I always like to give the example of, you need to treat trading like a business. When you run a shop and you sell, I don't know, something like shoes, for example, and maybe you see this nice sneaker model where you think like, oh, my clients really would love that. So you order a bunch of them, you put them on display, and well, suddenly nobody wants to buy them. What are you going to do? Are you going to cut your losses, or are you going to order more sneakers at a cheaper price in the hopes that somehow magically makes your customer buy them? And this is exactly what we see many times happening in trading. People do not commit to their stop loss. They add to the position. They want to bring their average price down or up, depending on which direction you're trading, in the hopes that, you know, they somehow can get out of a position at break even and just forget about it and move on. And maybe that even works out, you know, like 1, 2, 3, 4, 5 times. But I can assure you there will be a trade in the future like this that will just kill your account.
Yep. Yeah.
It happened to me,
adding to a losing.
I have to admit, not only once in the beginning.
Absolutely. No, it's very destructive. Adding to a losing position is
Yeah.
for some people it's a strategy, but it's never worked out for me. It doesn't work out for most people, and I feel like when you start exhibiting behaviors like that, you're starting to slip into gambling as well. I think that's where it really starts to that's where it really starts to become a problem, is you start exhibiting those tendencies, and man, when you get in that hole, it's not easy to get out.
Yeah, when you start doing something like martingale or strategies like this, and it's a recipe for disaster. And I understand it's hard, especially as a beginner, because our brain is somehow also trained on getting rewards quickly. We want those rewards now, and we don't want them 3 months down the road.
Yeah, it's really interesting that way. And what we always find is your bigger players, like institutions and so on, we just use that as a blanket word, obviously, that they tend to make the right calls, whereas retail makes the wrong calls. What do you think is the difference between the two groups, where it always seems to be that retail are the ones that are impatient and institutions aren't?
If having been in institutional traders, you are constantly questioned there. Your boss will call you in if you're sitting on a losing position and ask you, Dirk, was your exit plan for this one? When are you going to cut your losses?
Does that apply unnecessary pressure?
It is. It applies pressure, and I don't know if it's unnecessary pressure. I think it's necessary pressure, because it forces you to not ignore your position, but to start rationalize your position. Because and then you have like colleagues, who you can talk with all the time. All of them, or most of them, being experts. It's just a different environment. The systems normally of hedge funds, of banks, they also force you that for every trade you take, if it's a directional trade, you have to have an exit strategy. You have to have a price target where you can multiple times earn what you're risking on that trade. It's more, in a way, they have better underlying processes that force you into this direction. And as a retail trader, even as a professional retail trader, it's very easy to ignore your own processes, because you become biased.
I liken it to being a pilot, where a pilot of hopefully any aircraft, but certainly a commercial aircraft, will never, ever, ever skip their pre-flight safety checks.
Yeah,
it's absolutely unthinkable. But
even something like getting out of the plane, walking around the plane, to doing the side check, checking the tires. You should, if you fly next time, have a look at that. Even pilots, I don't know, flying the A380, they do that. You can see them walking around the plane.
Yep, and that's because they know it's their responsibility, but we don't see that following through with retail traders, because again, it's that lottery ticket mentality. I want to highlight two things that I kind of extracted from what you said, which is, number one, when you've got your superior kind of looking over your shoulder, constantly questioning everything you do. First of all, that one of the effects I'm gathering that would have is you're going to take yourself out of bad positions fairly quickly. You're going to be cutting your losses short. But second of all, after repeated practice of doing that, you probably just think a lot more carefully about which positions you take in the future as well. Exactly,
yeah. Exactly. And it's a bit like a coach, when you are a professional athlete, they all, most of them at least, they have coaches that are, even though they are already probably almost perfect at what they are doing, they are still having coaches that are questioning them or putting them into making sure that they are in the right mindset. And this is very much also what is going on there. See them not as your boss, that kind of wants to harass you and question you all the time. It's more like a coach that wants to ensure that you are at your peak performance. Because if you're not at your peak performance, you're going to lose money for the bank.
Do you think it would be beneficial for retail traders to somehow get that kind of experience for themselves and then go back to...
If possible, one-on-one coaching. I mean, that is expensive, obviously. Nobody can afford that. But in a nutshell, this is what I'm trying to do with the Prime XBT Trading Academy, to kind of offer guidance on how I, as somebody who does this for a living, is approaching the markets.
Okay, so tell me about that. Just before you do it, because I want to know a little bit more about that. I want to highlight to you guys that so Prime XBT is one of the as far as I know only exchanges that kind of works with crypto, but allows you to trade indices like the S&P 500, commodities like gold, silver, and oil, and forex all in one place. And that's with a Bitcoin deposit. It's a really cool offer, and you've seen the thing on screen, 7K bonus. Whatever you deposit, you're getting 7% back as a bonus. That's basically free trading money. If you make money with it, you can withdraw those profits. If you don't, consider it like a demo account. Works in the same way.
Yeah.
Very cool offer. And I want to know from you, Dirk, right here. This is you, right?
It's me.
Yeah. What do you what's the deal with the Prime XBT Trading Academy? Tell me a little bit about that, how that works, how viewers can benefit from that, and so on.
Yeah. Well, it's a funny story, you know. Actually, I started as a client at Prime XBT in 2019 when I decided I just want to trade my own portfolio. I don't want to earn money for others anymore. I traded crypto with Prime XBT, my crypto portfolio, and eventually they approached me, told me, "Hey, you're quite successful in what you're doing. We're thinking of building up an academy that where you can teach our clients, you know, not to walk into all those beginner traps that linger out there and that make people lose money." And I thought to myself, it's kind of cool, you know, because being a trader by yourself can get very lonely. You sit in front of your charts all day, you know, talking so much to anybody, and everybody likes to talk about things they're passionate about. So now I get to trade and I get to talk about trading, and I hopefully can do something good by showing people which mistakes to avoid, especially in the beginning of their trading career. And so that's very nice. And over time, this has really developed into quite a big project. I remember like 2 years ago when I started it, you know, I was like doing little YouTube streams here and there. And since then, I think it has really become quite a professional project. And I'm always very happy when I get feedback from people telling me, wow, what you're doing there and on this video or that video and in your live stream, that really helped me to avoid losing money. Yeah,
that's the most important thing. Yeah. What's the main content format that you're putting forward then that Prime XBT users can benefit from?
I try to focus on things that are always relevant. At the beginning, I talked very much about beginner mistakes and how to avoid them. I'm obviously doing like market outlooks if there are interesting things to talk about, like the golden cross in Bitcoin yesterday. We try to cover important economic data releases. Sometimes we trade them if I have an opinion about it. We did this I think in November on inflation data. Because a lot of people are interested, obviously, in news trading. And in a nutshell, really everything that comes to my mind that could be in the current market situation relevant to avoid losing money. This is the point. It's not something I show you how to win big. I want to show you how, as a first step, to avoid losing money. And if you're able to do that, then you can build upon that and start earning money.
We have so many parallels in our style. That's the first thing that I teach traders as well, is I actually talk about the difference between, like, you know, you lose 50%, got to make back 100, lose 90%, got to make back like 999%, something stupid to break even. That's absolutely the most critical step. And so from what you're talking about, it sounds like you're applying key theories, strategies, important things to keep in mind within a real-time context, like within what's actually going on right now in the market. So that's very
I think you need to do that. You know, there's more than enough theoretical content out there, in my opinion, on YouTube or on social media in general. But what is lacking very often is like to put that into a realistic context. Okay, I'm going to show you what I just taught you in theory, how to apply that in reality onto the market. So very often I'm actually taking the trades also live, so people can see this guy, you know, he puts his money where his mouth is.
Yeah, it sounds really cool. I like that a lot. Cool. And one of the big things that I want to move back to what I said a minute ago about like losing money and so on is you know, I've coached a lot of traders as well, and what I've found is the people that come for coaching a lot of the time, the very smart ones will come before they start trading. Bless them, they're the angels. But But a lot of the time, the ones that come, they're like, I've already lost a lot of money. I don't know what to do. And what I find is they've got this holy grail achievement of like, I just need to break even. And my take is, no, you start with your current balance and this is it. And now you're looking to with stability, with sustainability, rise, let that account balance rise up, and that's your start. And if you get back up to break even, great. But we're forgetting that original starting value now. You're starting with this, and anything other than that, as far as a mentality goes, is toxic, and it will result in losses. Do you ever talk about stuff like that? Do you have a particular take on that?
Yeah, and I always like to tell people that's like money they paid for their education upfront now, the money they lost. But I think it's also important to mention that it's normal. I don't know anybody who became a professional trader and successful first try. Everybody who has been doing this for a while will tell you, oh my God, you don't know how often I tanked my account before I finally understood it, how it's done,
How many times, if ever, did you completely blow up your account?
Oh, at least 5 to 6 times. At least 5 to 6 times, huh? In the very
I'm only
beginning.
at 3. Does that mean I have more?
Well, I hope you're staying at 3.
Yeah, but it's standard though.
Huh? Sorry?
It's standard. Everyone goes through it.
It's standard. I mean, the difference is then, are you doing that with all of your money, or are you maybe just partially using the money? That's another lesson, that it's important in the beginning to learn. If you have like 10K for trading, maybe in the beginning don't use 10K, maybe use 1,000K, because you're likely going to pay some money up front.
And that's actually where the Prime XBT bonus comes in really handy, because a lot of people they love the idea of playing with demo accounts, but then you actually make some money and you're like, shit, I wish that was real money. But bam, it's on a silver platter for you. Go grab it.
The thing with demo accounts, in my opinion, is, I'm happy that there are demo accounts available with some brokers out there, and I can see that it makes sense. But it fails to teach you one important lesson: the adrenaline rush you get when you're trading with your own money. The adrenaline, like the euphoria when you are right with your positioning, and when your take profit is hit, and when you suddenly feel like a god, like, I've cracked the markets now, I'm invincible, I'm going to be a millionaire in 3 weeks down the road. And also the total fear and hopelessness and loneliness when you either blow your account, and maybe you have a series of mistrades, even like maybe 3 or 4 mistrades in a row, when you start questioning yourself, and maybe when you start, maybe I should change this and that and this crack and nanny about in my trading system.
Yeah, you can't. I'm a very strong believer in there should be no space for happiness or sadness as a trader. If I find myself in a position that makes me a lot of money and I'm like more than 5% happy, that's a problem. That means I should be no more than 0% happy. I should be completely neutral throughout all of it, because if it's any sort of emotional reaction, that means I can get screwed on the other side of it too. And I found that the best way to insulate yourself from that kind of issue is just trading with less money.
Yeah. This is where leverage comes in also, no? That you can... Leverage is very often seen as like a tool for gambling, when in my opinion, it's more of a risk management tool you can apply. Because if let's say you normally would trade a 10K account, but in order to trade this 10K account, you can just deposit, for example, 1K or even less and still trade it as a 10K account. But it will ensure that if you do something wrong or something stupid, that you only lose 1K or 500 US dollars instead of your 10K. Now, just because there is a leverage of 1 to 200 or 1 to 1,000 even doesn't mean you always have to use it.
No. Again, just tools. It's nice that we can go up to it, but obviously we don't want to max it out. Dirk, if you have more time, I want to go back to your charts and go back to inflation. Sure. I think this is really interesting. Let's throw your chart back on, and I just want to hear your full thoughts. If you haven't managed to share anything else yet on this, on the macroeconomic climate and how this might impact crypto. I'm very interested in it. My take is that. In interest rates and inflation and all that, I don't pretend to know what I'm talking about, but I feel that as soon as this kind of reaches an environment where people are more willing to spend money in the economy again and so on, in some meaningful way, like what we had in the last few years, especially like with the stimmy checks and all that in the US. That's where we might start looking at stock prices picking up, indices like the S&P 500 rising up, and then obviously people just deciding that they want to be in risk on assets a little bit more. And obviously, there's a lot that falls under the risk on umbrella, but I'm talking specifically in the crypto domain where, people have to really be feeling some level of greed to be investing in crypto, and more specifically than that, to go from Bitcoin into the smaller coins, because that's what we generally see Bitcoin blow up first, and then, okay, you feel smart, you feel like you made a lot of money. Let's throw some money into the next shitcoin now, and then it turns into NFTs or whatever when the euphoria gets a little bit too high. But if we kind of zoom out and just look at like the real things that matter, let's look at this chart again. It's really, really interesting because it looks like this is a real setup for inflation rates to just keep dropping, just as they've done the previous 4 times.
I think it is. So there's, in my opinion, there's like one missing ingredient still. And what normally you will see in an inflationary environment like this is that inflation needs to drop below the interest, the Fed interest rates, in order for the Fed to consider lowering the interest rates or keeping them stable at least. And I think we're going to see this, if we're lucky, already in Q2 2023. I expect it more in Q3 2023, so sometime after June 30th. In the third quarter, this needs to happen first. I'm a bit surprised that we already saw the strong moves we saw on the stock markets. I expected more of a boring sideways move first. Like normally you have this phase of apathy, I think it's called in English.
Apathy,
apathy, especially in cryptocurrencies when nobody's really caring anymore, okay, that is over. I don't want to read about that anymore. I don't want to watch videos about this anymore, and so on and so forth. So that is kind of missing. Maybe something is going to happen that we are going to see this phase now in the second quarter of 2023. I don't know, but the setup is inflation is coming down. I also don't see like so huge moves in commodities and so on that would cause inflation to bounce up again very high. Maybe eventually we will see something like we saw in the past as well. So something like this, where inflation went down, looks a lot like what we are seeing right now, actually, and then we have a couple of months where it's coming up again. Everybody will panic. The stock market will go down again. Look what happened here. We had a correction to the downside. This could be something that is happening, but the overall narrative is still positive for this year. And if I look at the job market in the USA, that's so super strong. I don't see the signs for recession there, really. I would be very surprised to see a massive recession, for example, in the USA.
That's something I was... Go on.
Yeah, no, it's really, I know I'm trying to put it into simple words, because I also don't want to bore you with too much economic stuff here. But history repeats itself, as I said in the beginning, and I don't see why it should be different. And of course, that doesn't mean like that the stock market is now S&P 500 is going in a straight line to 5,000. Doesn't mean that, like we said earlier, Bitcoin is going in a straight line to a new all-time high in the upcoming months. There will be volatility. There will be massive volatility on the stock markets. I could see something like S&P 500 rising to 4,400 very, very soon, just to go down then to 4,000, which is a correction of 10%, and people will start panicking again. It always moves like this. This are the waves. That's why I say it's so important to zoom out a little bit and to see the whole picture. As long as the economy is growing, the markets will over time tend to go up. By the way, I also think it's a bad trading strategy to bet on crashes. It's the kind of trading strategy that works out every couple of years. So, for example, like in 2008, it would have worked out obviously last year. But you always pay like for 10 years of growth that you are missing on.
Absolutely. Yeah. I mean, Another easy way to visualize that is, you've got unlimited upside if you're trading the upside, and quite a capped downside as well, which does make it quite dangerous. And also, you're just looking at a different trading environment. It's just harder. The traders are better when there's no new fresh blood in the markets and so on, and that makes it a little bit challenging as well. I wanna get your thoughts on the dollar index chart. Is that something that you look at?
Yeah, sure. Actually, that was last year one of my best trades that I have. Let me quickly switch back here. Where I have DXY. Here we go.
And I just very quickly, I just want to focus on the range that's basically in our most recent consolidation right before the quick little flash dip and then the rocket up. Like this range right here has been important for decades. Do you think this is significant as well? And also tell me a little bit about what you were thinking.
It is significant, and it's kind of interesting also, in my opinion, because last year I always had like one of my best trades, at least until September, October, was keeping cash in US dollar and not in euro, because that appreciated by like just by keeping the cash, it appreciated by like 20%. Because I think in euro, obviously, because I'm living in Germany, in Berlin, so that was a massively good trade. What you'll very often see here, and that is kind of true in the US dollar, is that it kind of those moving averages here. So this the blue one is the 50 days moving average. That there is always going to be some price action on it. It's probably going to deflect from there now and maybe do a new low, which would then, by the way, also confirm my theory that the stock market is going up, because a weaker US dollar means money flowing into risk-on assets.
Yeah, I mean, look, I never like to celebrate, things like the US dollar crashing, because that's not good for Americans holding dollars. But it's a promising sign as a speculative investor and trader. Because this blue moving average line, this looks pretty promising. Which moving average is it? The blue one?
It's for 50 days.
50. Okay, yeah. Can we zoom out and look at the interactions with it? Because it looks fairly consistent. We're getting look at that. Wow.
Yeah, it's kind of that's why this trade also was for me so beautiful. Just like speaking from technical terms, because in 2022 it aligns so well always with the higher low. So the definition here of a bull market, so to say, of a stronger US dollar in this case. We had this here that was really, I don't want to say an easy trade, because there's nothing that is really easy when it comes to trading, but it gave really a good indication, and it also gave the indication, maybe not this one, because that was obviously fake out, but once we really went down on it, okay, seems like the dollar bull market, the strong times of strong US dollar are over at the moment. And now we see maybe the same pattern forming for a US dollar bear market. So going down, then the moving average moving like this, going up again, respecting it as a form of resistance, zone of resistance, going down again.
So two things here. I'd like to see how the dollar has interacted with this line in a bear market, so to speak, and also just get your thoughts on if we zoom out and look at this more on the weekly, monthly time frame. The only thing I'm worried about here is this kind of looks like a correction for the dollar. Yeah, like taking a look at this, it would also make a good amount of sense that this is, in my opinion, a very healthy correction considering how strong the dollar was between 2021 and the end of last year. A great, like what I was saying in one of my recent videos is if you're a bull for the dollar, this correction is what you want to see. Yeah. Let's start with the latter one first, and then look at the blue moving average line in a downtrend.
Let's start with what?
Let's start with tackling if this is a pullback within a wider uptrend for the dollar.
It could be. I mean, it's by the nature of US dollar. We're talking about currencies. You'll not really have trending moves, except you are like some country which economy is getting worse and worse and worse, something like Argentina or Nigeria or something like this. In general, you'll have this broad ranges. You can see that very well in the US dollar. So it's not like, analyzing stocks or cryptocurrencies where you have trends always to the upside.
So we're looking at more likely tagging something like 70, 80, and then
yeah,
back up
I
to
would
1.5.
maybe like for a start, not immediately. So this is also long time frame, something down here at 96, potentially even down to 90. But that if we see that this year, honestly speaking, that would kind of surprise me, because that would be a huge move.
Yeah.
If we translate that like to euro dollar, we very quickly might see euro dollar at 120 or something like this again.
And that would that just mean, you know, very low interest rates again? Is that the only thing that could put us there?
Yeah, exactly. That would be the case then, that we are either seeing higher interest rates in the eurozone than in the US dollar, because when the money is flowing into the euro. I mean, the economic movements behind those currencies are always like, the US dollar is, for example, getting stronger because institutional players are buying US Treasury bonds, which are denominated obviously in US dollar. So there's the demand for the US dollar. They need to sell their local currency, euro, for example, and buy the US dollar. This normally this goes into the direction where the interest rates are higher. At the moment, interest rates are higher in the USA than in the eurozone. Especially last year, the eurozone was kind of lacking in putting up the interest rates behind the US dollar. That's why we saw such a strong US dollar there. And now maybe the trend is turning around a little bit.
Very interesting. That's
if you're trading currencies, cool. It's like really you really have to at least if you're scalping, of course not, but if you are looking for like longer term swing trades, you have to take into account the interest rate environment always.
Yeah, that's good information. I haven't looked at it from this perspective yet about. To be honest, it's kind of obvious now that you've said it. You know, like we're not expecting the dollar to stay trending for a huge amount of time.
Yeah, I mean, see it like if you are running, if you're a very large institutional player, for example, a pension fund, you are of course forced not to so much speculate with the money that is, because it's there for pensions, obviously. So you're restricted in what you can buy. So pensions funds like to buy treasury bonds because they get a fixed interest rate every year. And what they are doing, they are looking, where do I get the highest interest rate at the moment for the lowest risk? Oh, wow, I get like 5% in the USA at the moment. And well, you know, the US economy, the US taxpayers can be considered as a strong country, as a A or AAA country. Yeah, we can discuss if that is still true and not. Of course, I'm generalizing now a lot. So yeah, you go and to your bank, say, hey, we need to buy like 100 million in US Treasury bonds. Oh, and we need to exchange our euros. So boom, you have an order then the market. I sell euro, buy a US dollar worth 100 million euro. This is driving demand then for the US dollar. And this, we see the reverse effects of that now happening as money seems to be flowing back into other economies.
That's huge. Thank you for that, Dirk. You've taught me something very interesting today.
You are welcome. It's like I'm very heavy trader in currency options. That's why I have to have thoughts like this every day.
Yeah, I like that, man. Let's round this off then. Let's take a look at the blue moving average as well. This over the last decade or so doesn't look like we've really had a particularly strong downtrend environment, so it's hard to say. Yeah,
if you look at I'm like zooming out like all the way interesting here in early 80s. We peaked here at 165. Never zoomed out that far on the weekly, to be honest. But you can kind of see what I mean. It's like you have this actually a sideways move. Sometimes.
No, it is more or less. Just trending downwards across.
Yeah, sometimes other currencies are stronger than the US dollar. Sometimes the US dollar is stronger than other currencies.
Okay, man, I have to ask you while you're here. I forgot the news. You're going to know it. Like, oil-rich countries no longer dealing in the dollar or not wanting to. Yeah,
that's interesting.
Do you think that's what could play a part in seeing a decline here?
Yeah, I actually not long ago read a piece of paper on that. I don't remember who wrote it. I'll have to check on that. Saying like we are probably going to see the formation of like like you said just now, oil-rich countries forming like their own currency that is then going to be used to pay for oil. Because they don't want to be dependent on the US dollar anymore. Of course, if you're, I don't know, like a country, I'm just taking Argentina. They are not like super oil rich, but just as a bad example, actually, that see that their currency is always devaluing versus the US dollar. You kind of don't want to always have to go and buy US dollar. Yeah, so. Because you're going to pay more and more and more in your local currency for it. That's why that totally makes sense. Maybe we're also going to see the Chinese somehow mingle in that to push their own currency. I was
thinking about BRICS. Yeah. When I mentioned that, that's what I was. Yeah. And do you feel like overall? I don't know if this is like down the kind of avenue that you think about, but do you feel like overall there are more factors weighing towards the US dollar just having overall less demand over the next decades, over the next few years, or that, we're just more or less looking at a fluctuation, like it's just headlines, people are talking, but no real change?
I don't know. But so first of all, like these headlines, like currencies that can compete with the US dollar on when it comes to international settlement of commodity prices, oil, and so on and so forth, that has been around since I started my career 25 years ago. As always, maybe we're looking at long-term trends here. It's for sure nothing where I would now bet money on, because this is really like long term. I mean, also funny enough, back then when I started 25 years ago, every year people were proclaiming that the USA are going to collapse the US economy is going to collapse, and that the US dollar is going to lose its power, its worldwide power, and somehow it never happened. So
a lot of people love, I don't know, it's like people have this like zombie survival fetish, and it's like the same kind of thing here, where they just get off on talking about total economic collapse, especially for like the United States. It's just a romantic idea.
It's a romantic idea. It's a nice way to put it. And of course, it's like a nice selling headline, no? If you propose something like this, you sell it, and maybe you are then same like saying, oh, the S&P 500 is going to crash tomorrow by 40%, and you keep on repeating yourself every day. Eventually, you're going to be right. And when everybody's going to write, this is the guy who predicted the crash of the stock market. He's the guru. And by the way, he has this nice book he just wrote. Coincidentally, he wants to sell to you.
That's the model, man.
This is how marketing works.
Internet money. Cool. Dirk, this has been great. Do you have anything else you want to add on here?
Yeah, I have my mantra I always like to repeat every time I end a video or end a stream. No matter what you're doing out there trading-wise, it's okay to make mistakes. It's part of the game. I may make mistakes on a daily level, even after 25 years. Important that you admit towards yourself that you made a mistake and learn from it. I do keep a journal. It's definitely part of my must go-to, because it puts things into perspective. I mean, it's like, I think something, we probably could talk another 45 minutes about, and maybe we should in the future. But whatever you're doing, always remember to use a stop loss, please.
Yep, manage your risk. Perfect. I love that. So guys, Dirk heads up the education side of Prime XBT. He's got a lot of amazing content there. It actually kind of sounds like it's in line with the content that I'm putting out as well. So if you've made it this far, you're going to know the deal. Go check it out. And with what you're seeing down below, you are getting up to 7K in trading bonuses as well with Prime XBT. It's a huge offer. It is a platform that you can use to trade indices, commodities, and Forex alongside crypto, which makes it OP as far as I'm concerned. That's pretty damn cool. And I have loved them for that for multiple years. I've used them for multiple years. No issues of like funds and security and all that. As well, so that's obviously good, standing the test of time as well. If you guys want to check it out, all the links are down below. Dirk, thank you so much. I think we should do something else. Let's organize that. We'll see what the viewers think. If you guys want me to do something else, guys, do me a favor, drop it in the comments down below. You already know the deal. Like, subscribe, tick the bell, do all that good stuff. Check out the links for Prime XBT and Dirk down below as well. And yeah, thank you for coming, mate.
Thanks for having me here, and take care, everybody out there.
Amazing.